warranted in the markets as we go into a long weekend. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Friday, the 13th of January. Can you imagine it's the 13th of Friday the 13th? Let's see what happens. The Fed versus trade triangles, how the Fed missed the housing bust and how our trade triangles got it right. We'll show you that with the stock. Also, three stocks that we're looking at today: Alpha Natural Resources, symbol ANR, Consol Energy, CNX, and Electronic Arts. We'll see how our trade triangles did in those markets. We'll also, on the radar alert today, is Harley-Davidson. Yes, the hog is back. We examine the stock in detail and show you what our trade triangles have to say about this market. Now let's go take a look at the charts with our Market Club's trade triangle technology. First chart we're looking at is the S&P 500. And we're looking at 3-month candlestick charts. As you know, we're right up against the top of the Donchian trade channel. And it looks to me, we had the signal at 1292. We're currently at 1283, a little bit lower. I think this market could easily come down for the next week or so. Nothing changes there, but caution. We've had two doji lines together back to back at the top of the Donchian trade channels. We also have what we consider to be a little bit of a negative divergence there. We made new highs in the index, and yet the divergences are going lower. Not a good sign. So let's see how that plays out, and certainly we'll go there. Let's just put a, yep, we had a daily trade triangle go in there at 1280.77. So again, let's see how that plays out for the day. Let's go to our next market. And we have lots of markets to talk about today. We're going to be looking at the silver market, which we, as you may recall, we've been a little bit hesitant and pushing this market. We are a plus 60, which means a trading range. We got up to the top of the Donchian trade channel, and as you can see, it's backed down from there. Again, it's going to close probably higher for the week, but not a particularly strong close. And also, when you look at the momentum, it looks to me like we can see this market come back down, perhaps towards the $28 an ounce level. So let's see how that plays out. This is spot silver we're looking at. Last trade is $29.67. So let's see how that plays out for the rest of the day. But generally speaking, looks to be a little bit negative to us. Same thing with the gold market. We've been not that crazy about buying gold. And as you can see with the gold market, we popped out of the Donchian trade channel yesterday. We've popped right back in again today. It's down. Let's see, we're down. Well, not that much. Let me hit a refresh here so we just get the latest prices for you. And these were my portfolios. And close this up, and let's just go back here. So this is spot. We're down about 0.37%, not much, but again, this is a situation where the looks to me as like we put in a top. I think we could see this market come back down a little bit, not too much, but I want to be looking to buy this market because I think it's going to be very, very positive in the long run. And let's see how that works out. But again, cycle-wise, it should be coming to a low. All of our trade triangles, with the exception of the monthly, are green, meaning we're in a trading range. And again, we are in a little bit of a divergence there, a little bit negative here. I think we can see this market come down and consolidate right around over the 1600 level, maybe even down to 1580, but certainly we want to be looking to buy this market somewhere along the line when our trade triangle monthly goes green. So next market looking at is the copper market. We talked about this market yesterday, had a strong move yesterday. Not much follow through today. Early on follow through, we are sort of lower for the day, higher for the week, and that's the key thing to look at. It looks like the copper market may be making a turn, and certainly you have to be a little bit impressed with the way this market action. We're plus 70, which means an emerging trend. However, we haven't gotten our monthly trade triangle into a green mode yet, and that's going to take a little bit more time. I would say probably we will have to trade over about another 5, right around these levels, I think. So, certainly the 380 level, we talked about that yesterday, over there. So we're not that far from that level, but sometimes close is not good enough in trading. So let's see how that plays out in the next few days. Looking at crude oil, again, the crude oil market, we talked about this before, the 104 levels being a very, very key level for this market to go through. It has been unable to do that on several attempts. You see 1, 2, 3, 4 attempts to go through the 104 level, and it hasn't done so. So obviously the next natural place for it to go is down, and that's exactly what happened today. We had a signal yesterday at 100.34, and that's worked out well on the short-term trading. Again, with crude oil, we use the weekly and the monthly, and the weekly and the daily. And again, longer term, we think this is forming potentially the right shoulder of a head and shoulders. Let me just show you what that means in terms of visuals. And that would visually mean that we're coming down very similar to this level, and then we're going to go higher. So again, the level we're looking at here is 104 on the March contract. If we go over that number, I think we're on our way to much higher levels, maybe the 120 level. But right now, this market is on the defensive, and I would expect it's going to stay on the defensive for certainly early through next week. And again, we got into an oversold condition, much like we were down here. And let me just clear the screen off a bit. I'm sorry about that. So we've gotten into an oversold condition, much like we did back here. And I think this is probably an area that we should be looking to psychologically get ready to be a buyer of this market, but not today. So let's go to our next market. And that market is going to be the dollar index, and that's putting in a very, very big day today. We made new highs, of course, on a Friday. You've got to be impressed with that. Trading as high as 81.78, breaking over the previous highs of 81.50, which we hit several times. It looks to me like this market wants to go higher. We're looking, I think 84 is the target zone we talked about in our weekly show, and I would say this is a very big energy field capable of carrying this market higher. So trend is your friend, plus 100. Strong trend, strong hands, looks like it wants to go higher. So let's see how that plays out. There's talk of devaluations, not devaluations, I should say, that's the wrong word, but downgrades in Europe this weekend. Whether that comes to pass, I don't know, but we'll certainly, the market seems to think so. So let's go to our next market, and that's the Reuters Jefferies CRB Commodity Index. And again, that is pushing down today, down to the 307.57 level. As you know, we've been talking about this market finding big resistance at the 315 area. It proved to be true. We're in 55, minus 55, trading range, longer term, negative, intermediate term, mixed, short term, very short term, negative. I think we can come down to the 305 level quite easily. And again, we may be forming this sort of head and shoulders pattern, but right now, this is not the time to catch a falling knife in this market, in my opinion. So let's go to our next market, and that's going to be the Forex. This is the euro versus the dollar, and I'll scope this in a little closer. And you can see today's big action in this market is on the downside, and certainly if we close, let me just show you a couple things I'm looking at. I'm taking everything off the screen. You can see the action today. This could probably be a new low close. One thing to look at, and that's to look at the weeklies. And if we close this level here, it's going to be a new low close on the weekly, which is not a good sign, in my opinion, for this market. Currently trading at 126.73. I would say probably this may be a good short for the weekend, and go from there. So let's go to our next market. And this is why I think the Fed got it wrong. I want to share this with you. And I'm going to go back several years, and I'm going to show you the Fed came out with their minutes today, and that's the weekly, but I want to go to the daily and go to a line chart. The Fed came out with their minutes, the transparency of the minutes, and basically said they thought the housing would be a soft landing. And I want to just show you how we got it right and the Fed got it wrong. So here we go. Going then back, this is the 206 minutes they're talking about. So we put our monthly in. Guess what? Boom. Right here, February 8th, 2006. We said the market's going down. We again said on the March 1st in 2007, the market's going down from 29. And that's exactly what has happened. Now, what's happening now? Everyone's really super bearish, but guess what? The trade triangles had their first signal in quite some time on December 1st. The last signal was on May 25th. So the first time we've had this buy signal, longer term, and it came in right around the 611 level. The market's trading at 7.57, so it's up quite a bit. But the trend is your friend. I'm not trying to guess the market, but the market's telling you, or Pulte is telling you, that things are getting better in the housing sector. And I know no one's saying that right now. So the triangles, go with the triangles. You'll be better off. Next market we're going to look at is one that came up, the stocks in the news, big movers. And you can see, I'll close this, I'll get this closer in, and we'll put our candlestick charts in, and we'll scope this out just a little bit more, and maybe a little bit more than that. And that's, you can see our monthly kicked in right here at 50.42, and guess what? This is a big mover today, down almost over 10%, ANR down 10%, but it just shows you how those trends persist. And this is the key thing with the trade triangles, to get you in. When the trade triangles flash a signal, don't ignore it. It's very, very important. Now, we trade the monthly trade triangles for trend and the weekly for timing. So again, we've had some signals here to get in and out of the market, but certainly that's the key thing to do, is look at the long-term monthly trends and triangles on stocks. So let's go to our next market, and this is CNX, Consolidated Energy. And again, this is a market that's actually, again, all of our triangles are red, meaning not a good sign. You can see from 45.35 right here was a signal. We're currently trading at 33.88. So again, this market's down quite substantially today, 7.22%. And the trend is your friend. This is a new, probably, I'm guessing, let me see here, not a 52-week low. The low was back. Just give me 1 second. Not a 52-week low, but certainly it's getting close. This is not a good close for this stock for the weekend. So let's go to our next market. This is Electronic Arts, and we're scoping this out a little further so we can see more of the chart. And we're going to be looking at hold on 1 second. Go back here, and for some reason we're having some challenges with this market, but let me just go back to a daily chart. And we're seeing this market come under a lot of pressure today. This stock is down 6.71%, and it looks as though we don't have a lot of data on there for some reason. I'll have to figure that out, but nonetheless, it's clearly down. The trends have been down. 1964 was the signal, and on the weeklies, and it's down, currently trading at 1820. So let's go to our next market, and we'll see this market is the HOG, the Harley-Davidson, the HOG. Yes, love the HOG. And these bikes, by the way, are very expensive to buy, and also, but they're not that expensive to run compared to a automobile. So here you are. This is the HOG is closing what will be pretty close, I'm guessing, to a 52-week high. Not quite, but it's a great close. And let me just get my telestrator on here and show you what I'm looking at. We can simply draw a resistance zone right around here. In fact, let me just do this into a line chart because I think it may be more effective. And if you look at the line chart and you look at where this market is and where it's going, potentially could be very nice. So the line chart would indicate that this is what we call the line in the sand, so to speak, where this level right here, and you've got this what we call an energy field, enough to push this market higher. So if you look at let's say we take 34 as the low point, and we take this level here at 40, so that's $6, and then we add 6 to 40, and it takes it up to 46. Which takes us right back to this previous high. So that's our target zone. The target zone for HOG is 46 on the upside. We're currently trading at 41.78, so $4, about a 10% return. Could happen very quickly, but nonetheless, this is looking good. We like this stock. So anyway, this is Adam Hewison. If you have a chance, please give us a, whoops, I want to take that off the screen. Give us a chance for the one-on-one coaching. It's a free call and a free consultation. 877-219-1482. Hey, Adam Hewison, if I don't talk to you later on, have a great weekend, and we'll see you on Tuesday. We may have a weekend report, but we'll see you Tuesday for sure when the markets reopen. Have a great weekend.